Hi student, today we're going to discuss chapter 14, Bank Reconciliation. This chapter is only focusing on the cash book and the bank reconciliation. The cash book here means that previously maybe you will receive a check or you pay for some of the check, but somehow there is dishonor happen. So in your latest bank statement that's sent by the bank, they might not reflect the amount that you already received or already paid. So in this situation, we need to update our cash book. Chapter we are going to cover the introduction, the reason why the bank account and the bank statement may differ. The bank account here means that the cash book, and why compared to the bank statement that you receive from the bank, the copy of the bank transaction is different. So, and then number 3, the difference between the bank account in the cash book and the bank statement. So what are the things will happen if when you receive a bank statement, and the step to prepare the updated cash book and the bank reconciliation statement. Okay, introduction. Bank statement is basically just a copy of the customer account in the bank. So the bank will send a copy, we call it bank statement, to the customer at regular intervals, either next month, 2 months once, 3 months once, every month. So they will send. Why do they send this? Because they want to let the customer check the money in and out record, and also how much remaining in the bank account. So second point is when bank statement and cash book balance side is different. So basically bank statement credit side means that plus, debit side means that minus. So credit side is means I still keep money in the bank. Debit side means I am overdrawn, but I having an overdrawn balance. Why would it be like that? Because banks see the customer as trade payable. So they treat us as a trade payable because they borrow money from the public. Okay. So number 3, it is important to compare the bank statement and the bank account in the cash book. Why would we need to do that? Later I will show you in the detail. If the two balance disagree, means that the bank, the cash book balance is not same as the bank statement balance. It is necessary to reconcile them to explain why there is a difference what happens has arise. Okay, so like example, write the debit and credit for the foreign transaction. This one I will discuss in the class. So when money received, the bank statement will show as a credit side or debit side, and the cash book will show debit side or credit side. Okay, so we discuss this. This is related to the point number 2. Okay, number 5. It is important to compare the bank statement and the bank account in the cash book. If the two balance disagree, it is necessary. This one is repeating in the point number 3. Okay, reason why the bank account and the bank statement may difference. So there is a few possibility may makes the bank statement and the cash book record balance is different. So occurred because of the different times at which the same item are recorded, such as I receive a check at last minute of the last date of the month. So bank needs 3 to 4 days to check whether this check is valid or not. Then only they will transfer the money into your account. So in this situation, they might not show in your bank statement for this month yet, only will appear in next month. But in your cash book, you already recorded as money received. Okay, so the next one will be the business not recording certain item in the cash book. You might not record it in the cash book, but actually you already pay to your trade payable. So some error might happen. So there is no bank charges, but you put it as a bank charges, or there is a bank charges, but you didn't record. So there is an error. Okay, timing difference. So now we go into the details. checks not yet presented, you will always see these two words A and B, and amount not yet credited into your past year paper question. So check not yet presented means that I already paid but not yet show. Amount not yet credited. Remember I say that credit side means that plus in my bank statement. So if I didn't not yet credited in the bank statement means that I already record in my cash book as money received from the trade receivable, just that it haven't show as a money received in the bank statement yet. Okay, number 2, item not recorded in the cash book. So such as the bank charges and bank interest will only know when you receive the bank statement. You can't simply write down the bank charges and the bank interest into your cash book without referring the bank statement. So part B, dishonor check. As I say, dishonor check is I thought that there is money inside the account, but actually there is not enough money to transfer. So at the end of the day, this check will consider as invalid check and no money received or no money paid out. But somehow my cash book recorded already paid or already received. Therefore, there is a different balance between these two cash book and the bank statement. So part C, amount paid directly into the bank. So when you directly debited from the bank, you forgot to record in your cash book because I set it as direct debits, such as the what is that? The paying the insurance. So you know every month which debt that you have to pay. You already sign up the letters that give permission to the bank and directly transfer the particular amount. So part D, amount paid directly by the bank to other. Same. This is like what I said, similar to the part C. Errors. So error made by the business should be corrected, and error made by the bank should be notified to the bank as well, such as maybe you overstated some of the amount, you overwrite. Like example, there is money received for 100 but you put it as 10, so there is an error. You need to adjust back. Let's say cash book make the error, then you must adjust back into your cash book. If bank statement make the error, then you must adjust your bank